Hello and welcome to another edition of Tax News. And we bring the latest news in the area of international tax, income tax to you. In today's news session, we are again going to cover two case laws which have come recently. The first case law is basically relating to the taxation of interest income earned by a bank. And this decision has been given by Mumbai ITAT in the case of Cooperative Rabobank. Now, the question here was that will the interest income earned by a foreign bank be taxed as business profits under India-Netherlands DTAA, therefore liable to tax at the rate of 40%, or it is going to be taxed under Article 11.2, which is interest, which warrants a tax rate of 10%. Now, briefly looking at this, the case was that the Netherlands Bank had a branch in India, and this branch basically constituted permanent establishment. There was certain income by way of interest earned by the bank in respect of interest on external commercial borrowings, on which TDS at the rate of 10% was deducted. The TDS was deducted under Article 11 as interest income. The contention of the tax officer was that such interest income should be taxed at 40% as business profit. However, on the factual side, Rabobank said that this interest income is actually not the income of the branch, but this is a payment which has been made by various branches which were situated worldwide to the bank, and therefore TDS was deducted on them at the rate of 10%. Now, in this particular case, the ITAT held that the interest which has been paid is in the nature of interest. Quite strange, right? What I mean by that is it's interest under Article 11 and not business profits, which should be taxed under Article 7 at the rate of 40%. So the distinguishing factor here could be that the interest income was paid by foreign branches of this particular bank to the assessee, and it was not necessarily the income relating to the branch in India, which constituted a permanent establishment. The second case is of the Ahmedabad ITAT and the India-UAE Treaty, and it relates to the payment of fee for technical services. Now, the payer here was Kalpataru Power Transmission Limited. Now, the question was, there is no FTS clause under the India-UAE Treaty. So if a UAE resident who qualifies as a tax resident is able to provide a tax residency certificate, a Form 10F, and a no permanent establishment declaration, will they be taxed under the DTAA if there is no FTS clause? So the facts of the case were that the assessee procured certain services from a UAE-based entity, and these services were procured for designing tower for a EPC project. The revenue said that these payments are in the nature of royalty. However, the important point here was that there was no FTS clause under the India-UAE DTA. Now, if the payment were to be held as royalty, they would have been taxable under the tax treaty, right? But because there was no fee for technical services clause under the India-UAE Treaty, the question was, in the absence of a taxing provision, will the income itself be exempt, considering the fact that the taxpayer does not have a permanent establishment in India? Now, there are other cases on this particular aspect as well, which you might want to go through, but insofar as this particular case is concerned, the decision was that since there was no fee for technical services clause under the India-UAE Treaty, and the taxpayer did not have a permanent establishment in India, these payments were not liable to tax in India. You can follow us on our website, LinkedIn, and Facebook to get our further future update regarding the breaking news and all the news that we are doing in. We do have a course on international tax. If you want to check that out, please do that. You can subscribe to our channel or follow us on LinkedIn to stay updated about all the future news that will be coming your way. Thank you for being with us today.